Once more, my name is Matt Rozak, and I did want to take a look back at David Treat's presentation on how he talked about CERN, and then that path that was taken to kind of ultimately get to whittling down the time frame. And I was on a panel last year where the executive director of Linux Foundation, Jim Zemlin, was like, explain blockchain in 140 characters or less, right? Like a tweet. And I was like, man, that's a tough one. This is a mouthful. And I answered as follows. I said, blockchain is a journey, right? It's not really a product. It's, we're exploring, we're innovating. We've got a ton of building to do. And in a lot of the discussions we have with enterprise customers, so the biggest brand names in banking and insurance, and there's usually two types of meetings. One is, Accenture, McKinsey have been in there for 6 months. We have 5 blockchain use cases. These are the 2 ones that we short ranked. Let's go. And you're like, that's impressive. That's like crazy impressive. And then on the other side, you meet with CTOs of household name banks and insurance companies, and they're like, is blockchain 1 word or 2? But it's emblematic of where we are in the space. There's a lot of learning, a lot of developing to do here. And so enterprise, obviously thematically, a big deal in this room. The other piece, and was touched upon with Representative Polis and Schweikert earlier, led by Perianne's question about ICOs and financing these new open source projects and these different approaches on tokenization and this new wave of innovation and access to capital. And one of the innovators in that space is here with us today in Brock Pierce, and he's going to share a special project he's been working on, was announced and the story broke by Bloomberg a few weeks ago, and he's going to fill in some more details for us today.
Thank you, Matt. Is this working? I'm on. Are you guys able to hear me? Yes. Perfect. Good morning. Thank you, Perianne, and everyone at the Digital Chamber of Commerce. In spite of weather conditions, this event has nailed it. So I'll give you a little bit of background on myself. And where do I have a clicker? Right here. I've been in digital currency since the late 90s, more or less full-time in Bitcoin since 2000. 2002. Officially in 2003, been working with Matt and many people here for a long time. I started a firm called Blockchain Capital. We were the first venture fund solely focused on investing in this ecosystem with my partners Bart, who ran Corp Dev and Biz Dev at E-Trade prior to starting his first company and then selling that. And then started a hedge fund with his brother Brad, who graduated, was a security analyst on Wall Street working for Frank Quattrone's group. And from there, Fidelity Ventures. Bart and Brad started a $700 million hedge fund, main investors in gaming. My background was in digital currency around games, kind of pioneered that market. They were on my board, and in 2012, I said I want to buy Mt. Gox. Goldman Sachs was on my board as well. They kind of laughed at me, and eventually we ended up starting this firm. I'm currently chairman of the Bitcoin Foundation and co-founder of Blockchain Capital. We just hired Spencer Bogart 2-3 weeks ago. Spencer was the main analyst on Wall Street for the Bitcoin ecosystem at Needham & Company. This is one of those great things that you find with people both in Bitcoin and blockchain is they're working for large organizations, and it's some small aspect of their time is dedicated to this space. And they're often very happy to leave and join a place that's a little bit scrappier, a little bit more startup-y, and to dedicate their time to their passions. I think at Needham, maybe 20% of his time was spent here. And Joanne and the rest of the team are fantastic. We've done lots of stuff. We'll skip over that. We made 70 plus investments in the space. We're doing a deal every 2 weeks on average. Typical check size right now, or historically through our second fund, is now $500,000 a deal. We've been doing this since the summer of 2013. We've written multi-million-dollar checks. But let's talk a little bit about data, and not myself and my firm. Venture money into the Bitcoin or blockchain ecosystem. 2014 numbers exceeded 1995 internet. 2015 numbers exceeded 1996 internet. These are relevant data points because back then it cost you $5 million to build a basic website to sell shoes online. Because of open source software, because of Amazon Web Services, because of software as a service, you can build those same businesses for $50,000 or less today. So this capital that has been coming into this ecosystem is incredibly important. Like when you plant a seed and it needs to be watered, it takes a couple of years for those products and services, to be rolled out. And I think 2017 is kind of the big year for digital currency as well as blockchain, in the sense that the internet wasn't very useful until you had a browser, an email client, content and search engines and things to buy. You need that basic infrastructure, the bridges, the roads, and the tunnels. And this capital has basically provided that. I think this is the year where digital currency goes mainstream, and it's not really in a place like the US for digital currency so much. I get approached by sort of antagonistic, argumentative people that sometimes are looking to pick a fight. And they're like, Brock, why should I want Bitcoin? And I always use this sort of reverse psychology on them, which is, you shouldn't. And they're like, what do you mean? I go, it's not for you. And they're like, what do you mean not for me? I go, let me guess, you got a bank account? And they're like, yeah. And I'm like, I'm guessing you get a piece of plastic in your pocket too that lets you conveniently pay for things. And you've got rule of law that's here in theory to protect you, and most of the time it will. You've got faith in the system, and of the 200 currencies in the world, you've got one that everyone wants more of. It's going to improve your life by 1% to 2%. And I'm guessing you're not waking up every day to clip coupons. And so it's really about the 3 billion people on the planet that have no financial services whatsoever. It's the 2 billion people on the planet that have limited financial services. It's for South America, Southeast Asia, Africa, in the same way that Africa leapfrogged wired telecommunications and went straight to wireless. This is democratizing the system in a way where every human being on the planet is going to have equal access, and it's the least fortunate billions of people on the planet that are going to benefit most from this. That's on the digital currency side, and I'm incredibly excited by the financial inclusion that that's about to create. On the blockchain, in terms of enterprise side, we've been in pilots with major financial institutions and such for the last couple of years. But we're talking about huge systems and trillions of dollars of value. You can't just implement these things, overnight. These pilots have been running, and I think 2017 is the year where blockchain goes commercial. And blockchain going commercial means revenue, M&A, and a lot more of that. So every major firm other than Sequoia, every firm but Sequoia is invested in this space. Maybe they're on the wrong side of history. Matt mentioned briefly ICOs. ICOs, I think, are incredibly fascinating. I was part of the first ICO, which was a thing called Mastercoin. I was a founding board member and I think one of the largest investors. This number is taking out a thing called the Dow because I think it's misrepresentative in terms of data. But you had 64 of these ICOs last year. And this is blockchain companies and people that are focused on our ecosystem. And this is that sort of early indicator and the thing that changes kind of everything. The biggest problem with venture capital, whether you are the VC, the entrepreneur, the angel investor, is that it's delivered very good returns historically, but it's illiquid for 5 to 10 years. And people don't like their money locked up, even if the returns are good. And so what this has done is this idea of tokenizing things and allowing for secondary markets is quite frankly, I think, the future. So my third fund is going to be doing a combination of both, but you had companies like Singular DTV that raised $7.7 million for their startup in 17 minutes. You've got things like Golem that raised $8.5 million in 19 minutes. You've got big market caps, you've got high trading volume, and most importantly, this stuff is liquid. So what we're doing is, and got announced this morning, is try to change the game. Venture capitalists, are investing in disruption and innovation, though they tend not to innovate very much themselves. The idea is to democratize the venture landscape. Historically, it's kind of been a clubby thing. We VCs get together and say, okay, only us get these deals. And crowdfunding and the Jobs Act and amazing legislation and things that have been happening here have kind of opened that game up. It was the first major leap in the democratization of venture capital. Historically, if you wanted to invest in innovation, it was a money-losing proposition because you were not going to get the best deals. You were getting the second, third, or fourth-rate deal. And the only way you would make money is if you won the lottery. Crowdfunding has democratized and allowed more people to participate in the financing of innovation. My view is that these ICOs and the tokenization of that same concept is the next major leap. It takes what has historically happened and takes it to the nth degree. So we're going to democratize venture. It's going to give access to individuals, low fees, no intermediaries, new ways of thinking about the asset class, and, well, we call it liquidity-enhanced venture capital, or it will be the first digital liquid venture firm. So you're getting all the sort of full advantages of a token or a security in this case. We're actually, I think, also the first one that has classified ourselves as a security, which we believe the framework that we announced today is the framework that everyone will follow going forward. Historically, most people were creating these convoluted structures for the purposes of circumventing securities law. Call it the gray area. I think that we put out the framework for everyone to do this correctly going forward, which is a Regulation S and a Regulation D SEC exemption, combined with incorporation in Singapore, and then following all the rules therein. And we believe we had to do this because practice what you preach. Our third fund is investing in ICOs in addition to traditional equities. So we might as well do it ourselves. So our third fund is also going to be this token for a small portion of the fund. I'm hoping by fund 4 or 5, I won't even have a GP-LP structure anymore. And I think that my fund's been blowing up by VCs left and right since I first announced this. Today was where the details came out. But saying, Brock, I want to be the next fund to do this. And because I think everybody that's in private equity, everybody that's in real estate should understand this lack of liquidity can be solved. So we'll disrupt that whole market. Why it matters for institutions: liquidity that you don't have currently, transparency, lower fees, selective secondary markets. This is what matters more. Retail, access to the best stuff that you've never had access to before, low barriers to entry, and that's us. Thank you.